employer does some matching, where let's say you put in 6%, they put in 3%, that's a 50% return on your money, even if you invested at 0%.
Right.
Yeah,
People just forget that. It's the simplest tool around.
And you like your real estate statistics. What was the one that you just had from the article?
Well, it's. I brought in an article about home construction. It's actually, we talk a lot about real estate and the real estate market on this show, and we've had a tight real estate market, meaning there's not a lot of inventory out there. So what happens? Well, that gets the home builders excited, and so the stats came out for the previous month, September, and apparently we have had a surge of new construction. It's up 38% year over year, so that's pretty significant. Now, before you get too excited, we're still at a fraction of the rate of homes we were building in 2007, but hey, it's going in the right direction.
There you go. All right, thoughts for the day here. 96% of the U.S. population lives within 20 miles of a Walmart. Pretty amazing. And believe it or not, there's a city in Alaska named Unalaska. Now, if they hate Alaska that much, why don't they just move? Don't name the city Unalaska. Welcome. You're listening to the Best of Investing on News Talk 910. You know our show. It's where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Robert Schiff of RPM Mortgage, California's best mortgage broker.
Thank you.
That's in our humble opinion, of course. And today's trivia theme is scary movies. I figured we just finished Halloween, so why not?
Okay.
Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And you can also record us in the future on a website called dar.fm. And we're also on television, Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m.
We're everywhere.
Or everywhere. We are everywhere. Speaking of everywhere...
we need the Best of Investing blimp next.
Yeah, that's right. And speaking of all
anybody
of that,
go to the parade
that's
on Wednesday?
Well, I went, but it was on my couch watching it on TV.
I was going to say, I paraded around my living room watching it.
Did you go?
No, I didn't go. And I watched virtually every Giants game they played, after the break, which is when I start to get excited after the All-Star break,
Sure.
and watched every playoff game, of course. But I just, the parade doesn't do anything for me.
either.
My high school daughter went, and she didn't watch a game the whole year. But for her, it was just an event to go to that had tons of people, and it was something.
Just an uplifting event parade.
The last parade I went to was when the 49ers won their first Super Bowl in 1981.
Yeah.
I was in San Francisco then, and that was
crazy.
That was insane.
I
hated it. It was horrible. It was just it was scary. There were gangbangers. I mean, it was all kinds of crazy stuff going on.
Well, I had heard
and they were so set to keep this clean. It's Halloween in San Francisco. I mean,
yeah.
They let it be known this was family affair, and you have a can in your hand, you go to the can.
Oh, brother. Robert. I tell you. Well, also I'd heard that because of the way that they had the stages and all that, you couldn't see the players unless you were the third person from the
Right, so if you go with binoculars, I mean, you might as well be watching it on TV.
I mean, when I go to the game, I actually get to see the players
Right,
there.
exactly.
So I
yes,
need to see them,
But I
personal,
did like some of their speeches, and I liked Romo's T-shirt.
His was funny. What, I may look illegal?
Yeah.
That's great. I love that. All right, guys, well, let's talk a little bit real estate. Mark, you were mentioning before we went on the show about some of the commercial loans that are going on, or just in general.
Well, we got, you had brought in an article about commercial, a renowned hard money lender who focuses on commercial lending was talking about, basically in a newsletter to his clientele that, if you're interested in high quality, privately funded commercial loans, you ought to start looking now because, we may be at a peak in terms of the quality of those loans, and so
They're disappearing.
Yeah, they are, and so what's interesting is my company Pacific Private Money, we do privately funded, also called hard money loans, and we've been doing them for the last 5 years in the Bay Area, and we have seen in the last couple of years the highest quality borrower. Hard money 10 years ago used to be distressed borrowers and stories of woe, and you were just making a hard money loan, and they called it hard money because you were really just lending on the asset. You just you didn't care who showed up to sign the loan documents. It was really you were making in those days it was mostly seconds, but the last several years, most of the privately funded hard money loans have been first position loans, and some of the borrowers have been stellar in terms of credit and strength, and that's because the banks stopped lending.
That's right. It reminds me of the S&L crisis in the early mid-'90s.
Yeah,
that was a really, really good time to be in the hard money loan business.
So
but why would it be harder now? I would think that the real estate market is certainly has a stronger base than it did a year or 2 years ago.
Like regulations, right?
Commercial also probably.
Well, the tone of the article was, if you want to take advantage of the high yields that you can earn as an investor in one of these real estate secured commercial notes, now is the time to look, because the banks are starting to lend again, and they're starting to come back into the woodwork, and so those of us who are in the realm of private lending, we're starting to see less and less of those, A paper or Alt-A papers, they used to call it, the stated income with but high FICO scores. We're seeing fewer and fewer of those lenders now, because there are some banks are starting to come back into it, and not so much in a big way yet, but on the commercial side they certainly are.
But also, if you think about Wall Street, if us hard money, or the hard money lenders are making good profits, and Wall Street's trying to figure out where to invest, and if real estate's starting to come back, it's a great place for them to invest, and that's where they're going to be snapping up a lot of these loans.
And that has, RPM has it took a couple of years after the upheaval in '08, but RPM finally secured lines of credit on Wall Street so that they could allow people to get jumbo loans, where the source originally had been Wall Street, and they clamped down. They're starting, like you say, to loosen up again, and they realize that's a really good rate of return for the security.
So in hard money, we're seeing we've been enjoying for the last several years, high quality borrowers and high quality real estate. So the people who fund those loans have been getting a good deal. But I guess for someone like me who has that business model of hard money lending, we're kind of at the peak right now, and I'm looking ahead going, 2 years from now I'm going to be looking back at the good old days of, A paper, high FICO borrowers, because I'm probably going to be, really at that point dealing mostly with people who have either scarred credit or are in situations where still the banks won't consider them.
And that's probably a function of the bottom of the market being past us, and the values going up? Or
I think it is. I think clearly, if you asked me, when was the bottom of the real estate market in the Bay Area, I would say the fourth quarter of 2011. Literally a year ago, because I remember a year ago at this time was it was the trough. It was still tough to sell. And people were wondering, looking ahead to 2012, well, is 12 going to be the year that we stabilize, or is it going to be another year like 2011, which was very disappointing for people who were trying to sell real estate. And
yet still, when I have people coming in to purchase or even a refinance, sometimes, and it's not all the time, but it's not infrequent, that the loan becomes problematic because down the street there was a short sale or a foreclosure, which puts an incredible damper on the appraised value of their property. So they have a house that they think is worth $750, and there may be one down the street selling for $750, but there's one down the street the other way where it was a distressed sale or foreclosure, and it got sold for $500.
So how does the appraiser deal with that?
Oftentimes they don't, and that's the problem. So here we're in a stabilizing market where there was an article this week about San Francisco's up 5% year over year. So we've had a recovery. Well, I don't know if I want to call it a recovery. Let's call it a stabilization. It doesn't seem like we're going down anymore, and if anything, it looks like we're inching up a little bit, mostly due to lack of inventory, meaning there's not as many houses to buy on the market today as there were a year ago today. But Robert, your point is that still, if you're trying to refinance your house or even buy a home, and let's say you're buying a home and there are multiple offers and the home was listed at $500,000 but it got bid up to $600,000, Now you go for bank financing and they order an appraisal and the appraiser is trying to achieve that value, but oops, right down the street there was that short sale for $450, and that does drag it down. So it really is, it's still, the market's still messed up, I guess that's the
Yes,
the point.
yeah.
We're nowhere near really at any
Well, we hear
strong recovery, I guess.
We hear more and more that more and more people are saying that the economy won't really recover until the housing market finds a stabilization and a base, and we're not there yet.
And that's a function really of what? Jobs, right? In the job market.
Also, the banks are still, with that shadow inventory, and how much.
Well, that's
are
still
they gonna-
always a question.
Yeah.
Are they going to? When are they going to? How are they going to? I mean, there's clearly
there's certainly
distressed
the
inventory.
programs in California with all the money that the bank's supposedly holding to go out to people and agree to refinance and lower their interest rate and even reduce the principal, and that would take potentially non-performing loans and keep them performing. But there's still all the non-performing loans, 20%.
Well, what about the ones that they had already foreclosed on?
Yeah.
Okay, guys, we're going to cut to a commercial break, and here is the first trivia question. Again, the theme is scary movies. Yes. Now, this one's not actually scary, but it was when I was a kid.
Abbott and Costello meet Frankenstein.
Oh, man. Okay, now I got to do Abbott and Costello meet the Bride of Frankenstein. Okay, what was the name of the Hunchback of Notre Dame? The first three callers with the correct answer win
that wasn't his name.
Hunchback. Yeah. His first name was Hunch. His last name was Back. No. What was the name of the Hunchback of Notre Dame?
Right.
The first three callers, and if I remember correctly, it's a one-person name like Cher. What was the?
You're
Excuse me.
sharing with us.
Yeah. Thank you. And we'll be right back. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hoff of Pacific Private Money and Robert Chip of RPM Mortgage. When we cut to the first commercial break, we asked this trivia question. What was the name of the Hunchback of Notre Dame? And Robert, what was your answer?
I forget. Cherie.
Cherie, no.
Well, it's you said
No, you
one
said
name.
Lon Chaney.
It wasn't Lon. It wasn't Lon.
Lon as in Lon Chaney,
Lon,
but he
yes.
did play him.
Yeah.
It was Quasimodo.
Quasimodo, that's right. The guy from Japan,
Quasimodo.
Quasimodo.
That's right.
That's right. Okay. There's another article here from, or regarding, as Mark puts it, Warren Buffett.
Warren Buffett,
Buffett.
or also known as Warren Buffett, Jimmy's brother,
Yeah.
just made a huge bet on the U.S. housing market, and what he's doing apparently is buying up real estate brokerages, and in fact, he's coming out with his own branded, based on his company named Berkshire Hathaways, which I guess is going to be it looks like it's going to be a division of Prudential. So, obviously there's somebody that thinks we've turned the tide. And of course, what was about 6 months ago, he talked about, if it were
For him, possible, yeah,
he'd be
buy a
buying up
bunch of
all the
houses.
real estate, all the
Yeah.
houses, and so. But I just find that interesting. Obviously, he believes that the transactional market is going to be healthy, and
Yeah, because he's actually buying up the brokerages.
Right, the brokerages,
rather than-
not real estate.
Not real estate.
He's
per se.
buying up the brokerages, or he's investing in his own. I couldn't be clear.
Well, but it doesn't sound like he's buying the houses, though.
No,
so
he's,
at least
no,
he thinks
he's
there's
buying
going to be
real estate.
activity.
So he's
right?
he's heavily invested in Wells Fargo, and Wells Fargo is the biggest mortgage lender, at least in the entire western United States.
Okay, so at least he thinks there's going to be a lot of
A
transactions.
lot of transactions, and apparently a healthy market if he's investing in a bank that's the biggest mortgage lender.
Yeah.
And
well, apparently their combined network will be more than 53,000 agents under the.
He's going to be a big
the new-
babysitter.
the
he,
new- yeah,
he
the
also
new-
has several subsidiaries
Yeah.
that are banks that buy up loans on commercial properties that are in distress, planning to either take them over and restructure them and sell them or keep them. So he's really
But is he going to the banks directly and buying them?
he is the bank. He's becoming the bank on those commercial properties.
But I mean, how's he getting the loans?
Berkshire Hathaway has a facility of borrowing from themselves. They have a lot of cash in hand.
Oh, are they originating loans?
No, they're
Okay.
they're going to for instance, there's a commercial property I was involved with, and people that were, and they had bought it for $8 million. There was a $6 million mortgage on it. It was in Las Vegas, and its current value is about $2 million. and the bank was going to foreclose on it. What were they going to do? He came into the bank that had $6 million, said, instead of foreclosing, why don't I take over the mortgage, but I'm going to only pay you $1.7 million for it. And then it's off your books, it's a loss, you can write it off, you don't have to have reserves.
Yeah.
We'll go on, and the people will be foreclosed out, and so now he owns a property that's has a...
Well, he bought the loan. He doesn't own the property.
He does, because he foreclosed on it.
Oh, did he foreclose on it?
Yeah.
Okay.
Or another model was he went to the current owners and said, you can either deed it over to me, or if you want to stay, I'll give you 10 cents on the dollar and you can stay, and you can't, you're an inactive partner, and if we ever sell it, it's sort of like the movies, it's the guys that produce Godfather, they're waiting for it to make money to pay all the investors, so.
So what does this mean for real estate in California, real estate in the Bay Area?
Well,
Who
Warren
knows?
Buffett, isn't real loose with his money, and he's a pretty astute investor
Yeah.
in terms of what he does, and it's long term. So
And it wasn't so much California, right? It was
it's
Oregon.
Oregon and Connecticut.
Okay, so maybe that's where he thinks that there's going to be a big push. In fact, let's go right to this, because Mark, this kind of feeds in a little bit to well. Here's an email that we received for you. It says, I've heard you talk about making short-term loans to flippers, but do you make longer-term loans?
Oh, good question. Yeah, we do talk about a lot on the show about hard money, privately funded hard money loans, and that how many of the borrowers of those are willing to pay higher rates, like 10, 11, maybe even 12% for the use of that money for short terms, because they're buying, fixing, and flipping distressed real estate. Maybe they're buying from banks or they're doing short sales, but that's been probably 60 to 70% of our loan activity the last 2 years at Pacific Private Money has been making loans, short-term loans, usually a year or less, to real estate investors who are buying, fixing, and flipping. So the email asked, do we make longer-term loans? The answer is yes, we do. We absolutely do. And again, we're generally making longer-term loans, and longer-term in the hard money world would be like 2 years, 3 years, maybe 4 or 5, but generally I don't.
No more than 5.
Yeah, generally no more than that. And on those longer-term loans, we can generally get better than the short-term